Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting the lab today. It is Monday, February 23rd, 2026. And there's a lot going on today. Geopolitical issues, tariff issues, and a lot of disruption to the market in the sense of potential outsized risk. So, with that in mind, we always need to understand that this is a business of risk and risk management and of also opportunity. Uh, One moment. So, always keep that in mind. Now, let's get started. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. This is the business of day trading, understanding how the market works, why it does what it does, how at times to get in alignment with it. This is not a trade calling room. This is really about helping traders understand that this is a business of alignment and time frames. So while one trader might be getting long, another trader might be getting short, and there is no right or wrong. In as they like, I guess we say the bottom line in trading is a statistical probability that favors you. If you do not have a statistical probability, no matter what you're doing in any time frame, you're gambling, and unfortunately, gambling is not sustainable. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. Also, don't forget for the month of February, and time's running out, you can win the coveted blue jacket. And not only is this really cool, you can also win 3 months of Global Plus with also 3 months of data included for either stocks or futures. You don't want to miss out on this. So take a look at that. Go to bookmap.com if you're interested in submitting charts of execution on the Bookmap platform. Doesn't matter if it's real time, whether it was sim or on a replay, just annotate and send it in, and you might win the coveted blue jacket. Don't forget about that. Pretty cool. And I like, as my mother used to say, free is good. This is the process that we're using here. Very simply, auction market theory is just market mechanics, how the market works. The volume profile is the chassis or the tool that we used to see market behavior. It's not indicator driven, at least for me, trading isn't. It's very much volume or auction based. In other words, what's the purpose of the market? The purpose of the market is to figure out what's too high, what's too low, and what's fair. Now, the thing, of course, that's always interesting is this is a vertical integration of time frames, higher time frame down to shorter time frames. And the market continually rotates, and it rotates to try to determine what's too high, what's too low, and what's fair. Now, what throws us off typically is something called context. Is the higher time frame up or down? Is the intraday time frame up or down? What happens if the higher time frame trend is up, but we have a day to sell? Does that create conflict? How do we align with that? And how does that differentiate between different traders who operate in different time frames? Isn't that interesting? Well, we try to answer that in the Trader Lab and help you develop a plan so you can stay in alignment with structured trades that you have vetted that give you an edge. This is very much a business of randomness and detachment from outcomes, and it's absolutely not how we're wired. So we're all emotionally attached in the need to be right and fearful and all this. Guess what? That's not the business you're in. You're actually in a business that absolutely has to behave differently than what you do here on planet Earth. And while you can intend to do something, if you don't learn about the mechanisms that interfere with your intention, or even conscious intent, I should say, then you're never going to break out of that constraint, and you'll always have the same problem. Now, and that's understanding time frames, context, alignment. And here's the thing nobody or very few talk about: emotional attachments, hormonal behavior, fight and flight, and the rest of it, and what it does. And if we don't understand that, then we're just going to keep doing the same things and take ourselves out of the business. Bookmap is the order flow tool. I call it the tip of the spear. It lets us see inside of behavior. And the closer you can get to where the rubber meets the road, potentially you have an opportunity to align with it. Now, I'm going to show you the higher time frame. I have to mention to everyone that there's a data problem here with my higher time frame chart, so this is not necessarily accurate, so take it with, as we say, a large grain of salt. Now, this is Friday's behavior. Notice what we did on Friday. We tested the previous low. I think we took it out by a little bit. I don't know if my data is accurate. And then let's remember what happened. We had an excess low down here where we found our buyers. This was too low previously. These yellow lines are like retail prices, high volume. Remember, shopping. If you come to a price that was previously too low, think of it like you go to your store. It was on sale, but now you can't buy it here anymore. If the market comes on sale again, and this is a very simplistic way to think of it, but really trading is shopping. And now we come back to the sale price and it's still too low. Our buyers go, really? I can throw 20 in the cart down here? Let me throw some more in. So the buyers who perceived this as too low showed up again over here, and there we go. Now, let's look at the other side. We had our sellers in here and in here. So we have shorts here, and we have previous shorts in this down leg. We get more shorts in here, and then we come across the range, squeeze the early shorts who sold for continuation. Don't forget, we found too long. And now those shorts get trapped and squeezed. The shorts in here get squeezed. And the next day, the buy stops here, the buy stops there. In other words, the shorts and more shorts in here get squeezed. Now we got the shorts out. By the way, on this day, our target was here. You do remember, 23.75. And what about the longs in here? Under the bus, Charlie. Where are the sell stops? Under here. Where do we go? Into the sell stops. Now, what happens from here? Don't know. Then Friday open, and I think, and this is off the news of the Supreme Court, striking down the tariffs, which is very positive for the economy, which is why, and the stock market and inflation. I'm just talking economics, no opinion otherwise. That's why the market went up. And then, as you guys know, over the weekend, maybe not so much. New tariffs and the possibility of geopolitical event with military action with Iran. Very nice. So what do we know about here? If the market goes down to squeeze the shorts, now the market, which took out longs from here, goes up. This is kind of neutral. This was Thursday. We take out the shorts, clear out the stops, and the target on Friday was 45. Didn't get there. Who knew? Then, because we don't know. Then we open here today and we go up, and let's look at the market mechanics. We got longs in here, early buying, more longs, and what happens to them? Under the bus. What happens to the longs in here? Under the bus. Do you see something similar? What happens to the shorts in here? You get that, the selling, squeeze, squeeze, squeeze. What happens to longs in here? Initial buying, down, down. And it doesn't have to do that. I just want you to understand it can do anything. But in the Trader Lab, you would begin to understand market mechanics, how the market works, why it rotates. This is a primary understanding of market mechanics, which I focus on in Trader Lab. And the reason I do it is because most retail traders have no understanding. And the more you can understand about how the market works, not predictive, by the way, we're not in the business of prediction or being right. And I know that's hard for all of us. Me too, because we're still human and we're still attached to outcomes. Let's get the Bookmap. Now remember, my data is potentially off. So let's look at what we are doing, assuming these things are correct. And if they're not, you guys might let me know. I have no real ETH levels, so I don't know about them. RTH open was around 69.08, is that correct? And I'm opening in range in value. So when you open in range in value, then the market's in balance. So what do we what is the potential? Well, potentially two-sided trade. So we have to see what happens. So the first thing is we have yesterday's high over here, and we have, hold on, an open target, if you remember from Friday, of 45. So, and this is yesterday's or Friday's high. There's stops there. And then we have the naked volume point of control. Are these levels accurate, Trader Lab? Around 20. Overnight volume point of control, can somebody confirm that? Because that's the one I don't have confidence in. How we doing, Trader Lab? Can I get a response? $69.03, close enough. Okay, so we're opening in a fair area, in value, in range. We anticipate, at least I do, and it doesn't mean it'll do anything. You got to understand this. I don't know what's going to happen. Anybody, who thinks they do know doesn't understand, is just full of baloney, in my opinion, because we can't predict the market. This is a business of alignment, patience, and waiting for trades that are vetted, and that's what the business is. It's nothing more than that. It is random, and we have to get used to it. You can, of course, have your own opinion about the market. That's okay. I'm not saying there's a right or wrong. I'm saying is the results kind of show up in the net. If you have a trade plan, your job is not what happens on one individual trade. Your job is to take all trades that have a statistical edge. ETH high, can someone confirm that, please? $69.06, $69.03, okay, overnight VPOC. 23. Okay, let's get going. All right, so this is the RTH open. We're opening in range and value. Okay, 09 is not correct. Okay, the ETH levels are off, which is fine. So this is yesterday's high. Now taking out yesterday's high or low, so you understand, opening in range and value suggests a two-sided trade or a rotational environment. So when you open that way, at least for me, I anticipate that we can rotate. So it's a bit different, at least for me, because I know that if I take any trades, I can very much come down and take out the opening swing high or low. In other words, whatever the opposite side is in a rotational environment, I can come down. And then statistically, if we're opening lower inside of yesterday's range, I have an 87% probability of taking out the previous day's high or low. Well, it looks like the high, doesn't it? Taking out the ETH high or low, 98%. Taking out the first hour's high or low, 98% probability. Getting to the previous point of control, 68% probability, which is there. So I have a 68% probability of going there. Value area high, I have a 56% probability, but taking either the value area high or low is a 91%. So starting out, this is suggesting, if I opened here, that I got this, this, and this. So the first trade, subject to the plan, would be a long. Now, the other thing you have to know about is, based on knowing about the geopolitical situation and everything else, would you be taking longs? Or if you do, you just follow your plan, which is fine, and you take your trades, and whatever happens, happens. It's not about anything more than alignment and just following the plan. So let's take a look. Is everybody with me so far? And by the way, if you're visiting in YouTube, thanks for being here. And again, remember, if you're just coming in late, I am having a data problem, and it has to do with my higher time frame. Bookmap is accurate, but some of the levels you see in the cloud notes can be off. Let me see if I can get where I'm trying to go here. All right. So the ETH levels are not correct. Okay, RTH open. Now, I'm going to talk about structured trades. Hold on a second. I lose these chats here. One moment. Guys, are you in YouTube? I'm a little confused here about what I'm looking at. Are you seeing Bookmap right now? How about YouTube? I can't tell what's going on with YouTube. All right, I guess it's okay. Seeing Bookmap? All right, thanks. Okay, thanks. And Stuffle, thank you too. Good to see you. All right, RTH open. Sorry, guys. Things are just a little strange as usual. And I'm not even in Costa Rica at the moment. This is the RTH open. So let's go look. I'm going to talk about structured trades. This is a Trader Lab process. Now, the thing to understand about trading, guys, there's not one way to trade. But most of us start out in this business thinking that it can be mechanical and that we just show up and push the button and then we're going to have an ATM in the basement. If it was only like that, wouldn't it be nice? Doesn't work that way. So let's go take a look at what we know. Remember what we know. We know the market is long from Friday, and if we open here inside a value, we can anticipate two-sided trade. Okay, that's the only thing I know. I know I've got about a 67% probability of going here. I know I have a high probability of checking the settlement and about an 87% probability yesterday's higher low. So the first trades, subject to your plan and time frame and whatever it is you come up with, would be a long. Let's see if we get one. Now, again, remember, these are not trade recommendations. The fact you see the market do something or me describe something here, there's much more to it to understand where the trade might show up, why, what direction it might lean in, the behavior, the triggers, the risk management, getting scaled to get risk neutral, targeting, and it's all based on trades that you have vetted, not anything more than that. I'm kind of a guide here, guys. I'm doing this 47 years, but it doesn't take away from the randomness. You can't squeeze risk out. You cannot create certainty. So you can spend your life trying to do that. I spent many years trying to do it when I built systems because I thought I could optimize and solve the problem with an optimization process. I'm just telling you, if you're not familiar. So now this is a long time ago as trend following, position. But it's the same because time frame, the behavior of the market is generic. It is a time frame issue in the intraday time frame. So different traders trade different time frames inside of the rotations. That's what makes this somewhat unique because you can't replicate what somebody else does. You can observe it, but you can't replicate it. So you have to find what speaks to you in your groove. Okay, we doing okay? How you guys doing in YouTube? Hope you're getting something from this. Let me try to get caught up here. I'm still having some issues naturally. Okay, this is the retail price. Yellow line is the high volume. It starts out looking like this. And the auction is very much a too high, too low retail. Think of this like shopping. If you were, and this is a distribution of volume, and these are called distributions. That's all it is. This is not complicated. When you go to the store, if the price is too high, you'll have less buyers. The volume dries up. Very logical. If it's on sale, and you're going to say, well, why wouldn't there be more volume when it's on sale? Well, the volume dries up also when it's on sale because the sellers don't keep it on sale. So there's going to be less volume, and the high volume is like a retail price. Buyers and sellers are willing to do business, so that's fair. So in all time frames, this process of auction or in rotations, if you want to think of time, you can. I don't use time here. I use time elsewhere, but I don't use it in here. I'm letting the participants determine, based on the rotations, not the clock, what is important. So based on this, I know my sellers are there, my buyers are here, my retail price is here. So resistance, support, who knows? Break high. As soon as I break high, let me show you. I'm going to mark this also. Hold on. Now, I made this up many years ago, and I got a lot of pushback from the market profile world at the time because it wasn't, quote, orthodox. Like this is the way it's supposed to be, institutionalized thinking. Well, if you're in this business, you got to think, and you also have to think differently than other traders do so you can have an edge. The more you act like everybody else, the more you can anticipate the same outcome. And the same outcome, as you guys know, is about over 90% retail traders fail. Well, I don't think that's maybe what you want to do, unless, of course, you can develop an edge using those processes that favors you. I found that what I created by doing those things was ultimately I learned what not to do by doing what they do. But I didn't understand at first. I was trying to fix it. So what does it say? This is too high, sellers. This is too low, buyers. And I don't know until I break above this. Now, when I break above this, I have a couple things. Right here, this is extremely aggressive opening trade. That's one possibility. Very aggressive, and this is not a place for developing traders. This is called VPOC migration. Now here's the language. Let's look at the language. Too high, too low, leave it, I'm out of here, too low. New retail price, yellow line. It's called developing volume point of control, highest volume. Now, let's look at the language. Let's come back to language. For me, the auction's a language, so it's like a foreign language, or a musical instrument, so I have to read it. And I've learned to read it because I don't use standard type indicators. I use measurements of volume, delta, order flow. But I don't use, your standard RSI envelopes, VWAPs. I use some VWAP, but not much. I'm much more interested in here, in behavior. So that's just me. And you could use whatever you want. This is the developing RTH VWAP. This is the mid. Okay? So I come up here. I get a sweep. Now, when I get a sweep, it sets up the potential for a counter rotation. Now, let's look at what we know. Liquidity was here. High volume is there. Microstructure. Let's just try to look at this thing and see what happens. We're going to look at that. We're going to look at this. And what is this? It's the same as this. This is high volume. There it is. In here, There's high volume. And you'll notice the sellers are here, the buyers are here. So we had the buyers, the sellers. Get over the sellers, break high. You see the structure. This is a very aggressive long. You'd be buying it probably here, and your stop would go under here. Not a recommendation, it's a structure. Next structure is here. Let's look at what it looks like. Too high, too low, retail. If this price is too low, and I got this, I can break high. Let's keep going. I get a sweep which says counter rotation. Let's see. There it is. There's my sweep. There's my counter rotation. Now, I don't remember any of this because I've been very busy with other things here this morning, and with the data issue I have, I will not trade. I see a lot of trades, but I have some other things going on here. So I have not taken any trades today. I wasn't even able to watch this, very little. This is support. So in the Trader Lab, this is a advanced structured trade. This is an order flow trigger. There's your sellers, there's your buyers, and where was the retail price? Here. What was too low? What was too high? Retail price. Break high, test, too low. Break high, test, same. And you have VWAP, you've got order flow. This is a advanced process I've shared in Trader Lab. This is an order flow trigger with support and a continuation. This is a long. Now, where are we trying to go with this thing? Watch. Order flow, watch. Now, all I'm sharing with you is structured trading. This is what I've shared in Trader Lab. I've taken what took me forever to figure out, and I've distilled it down, and I've taken some of those pieces and I've shared them in the Trader Lab. See the behavior? What does it say? Do you see anything similar here? Liquidity. This becomes support. Break high. New retail price. Now, I'm talking to you guys and sharing to this. Sorry, guys, I was just reading the chat. This is support. Notice the similar behavior. Support. Okay, this is structured trading. Now you have to vet these, and the other thing is all trades take stops. All of them. Haven't met a trade yet I haven't taken a stop on. How about you? Where are we trying to go? Here. What was this? Notice the alignment. This is the retail price from Friday. What was the probability? Wish I knew. Let me find it. About a 68% probability. These statistics and these structured trades are available to everyone in the Trader Lab. By the way, past performance is never indicative of future results. You have to vet everything for yourself. Remember, it's 100% random 100% of the time. So what do I know? Let's draw our little box. Do you guys see anything consistent? Now remember, the market is random. What do we have to do? Good question. Maybe we need to be consistent. Maybe our inputs need to be consistent. The outcome is going to be always random. Is this making some sense? Yes, no, maybe. Willer's DTN is down, so it's not going to work for you. Is everybody tracking? How are we doing in YouTube? Everybody alive? I know it's Monday. Trying to see what's going on here. You know, it's a little rough when you're trading in the dark. I could trade this, but I don't. I have to tell you, when I walk in and my data is out of whack, because there's a server problem outside of my control, emotionally, right away, it creates noise. So, because you got to have confidence in what you're doing. Now, I can read this and trade this. I don't have a problem with this. But the emotional response is something. This is the next target. So we got settlement. And don't forget, we're going for yesterday's high. Why not? So all these are longs in the Trader Lab. So now this is advanced, but that's a long. That's a long, that's a long, all structured trades. Now, when I say it's a long, I'm saying it's a structure. It may not be your trade. Okay? It's not about you taking these trades. The idea of the Trader Lab is that you can learn how to trade and then isolate behaviors. And it's not mechanical. In other words, we see this. On another day, this would be nothing. The reason today is that way is because statistical probabilities are favoring one side, and that's initially the long side. Now, subject to your plan, you may not trade the long side. You may say, no, I'm not getting long, or you just take the trades. I tend to be somebody, and again, not a recommendation, I don't let things, fear, rule me. I let my trade plan rule me in this environment. If my trade plan says do not trade because of outsized geopolitical and who knows, risk because of the current situation with Iran and tariffs and pick one, then my job is not to trade because my plan tells me you don't trade because of potentially outsized risk. Okay, or I trade anyway because I accept the risk every day I'm in the market. Sometimes I don't know about the risk, and of course, since risk is random in and of itself, and we know that stops do not limit losses. If we're in this business trading with this in futures, we have to understand what that means. I've traded through Desert Storm, 911, all kinds of different things, and I can tell crash of '87, and I will tell you that you have to know you don't know. So the things you know are one thing, and there's always the things you don't know that will come out of left field because it's outliers and probabilities, and they will happen to you. So always be adequately capitalized. Don't take anything for granted. Where's our next target? Here, right? So support is here. So let's come back, right? Where's our support? Let's just see. Now we have VWAP. Let's just watch. By the way, if you get to VWAP, you could take along to there. This is now resistance right here, and support is going to be there and there. Let's just see what it does. Next target. So far, this is behaving very nicely for longs. And then you're going for this, yesterday's high. Okay, let's look at this. I want to show you some ideas, right? This is why I do this stream. I want to show you ideas and concept. I want to show you that in spite of the randomness, which is going to drive you nutty, because you have no control over it, this right here sets up a long behavior. Now, here's what you need to be thinking about. Liquidity comes in the book. This right here, if you took this, this is where your scale would be. Let me show you. Now, if you're not thinking, you have to be thinking in multiple time frames all the time. And you need to be looking at where behavior might take place and be ahead of it. This is what a trade plan is all about. Not chasing the market around, but knowing when you see this behavior and you see this and you see this and you see this and you have that, and we come down. Now here, if you took this long here, you would get risk neutral and taken out. If you came here and you took this, you'd be coming back to there. And you're going for that. And when you're here, you're looking for it to continue to yesterday's high. But the market, of course, can do whatever. So let's look. This would be a viable long going there for a scale. So let me show it to you. Now, I'm showing you trades that you can vet, and you should go back and review these streams and isolate the trades and just see, what you see. Always be thinking, if this price, too high, too low, retail, what happens if we find a price that's too high, wherever it is, and we come back to a price, high volume, that was too low that we left? What are the possibilities? And it's the fair price from Friday. If I break above it, like any other retail price, can I come down and go, is that still too low? Well, if it is, what might I do with that? I might buy it, have a stop under here, and I've got to get risk neutral ahead of the last retail price that was too high. Right there, you see the high volume? This right there is the same as that. And you're going to say, well, Tom, what do you mean they're the same? Shopping. If a price in the store in any time frame becomes too low, I can leave it. And then I get a new retail price. This is for the developing daily time frame, this yellow. So it takes all the volume so far for the RTH, and it says this is the high volume, this is the retail price. As I go down in time frame, let's think of it as you guys do. And again, this is not time regulated. That's why I always say I don't use time. I use structure. So I know if this is too low, oh, it's on sale. Throw 20 in the cart. Retail price, too high, too low. Oh, it's still too low. Then I come back and I come back to what was too high. So if I find too low, I go back to too high. That's my scale. And either I continue or I'm going to bounce off this and maybe come back, or whatever it does. No way to know. Watch. See the behavior. See where it's happening. Watch. So here's what I know. This price is too low. What do I know here? This price might be too high. This is in this short time frame. In the next higher time frame, developing daily time frame, this is the retail price. Is it too high? Outside, watch, let's see. It is too high. What's this? Support. So, and this is resistance. Let's just see what it does. What do you think of that? Is this interesting to you? So what is this, Tom? Well, that's too high. All right. How do we know that? Benefit of hindsight. How do you like that? But that's resistance, isn't it? Break low. Now, this is a Trader Lab process right here. Let me show you. If you have this in your plan, it's along to there. There's the resistance. If I break low and I can't clear this, where might I go? Back here. Is this too low still? If it is, I can come back there. So if I take a long here, I'm going for there. If it comes down, I'm not stopped out. Could get stopped out, who knows? New retail price. What does this say, Tom? Oh, that is too high. Uh-oh. But what happens if this is too low? Then I go back to what was too high. See? Then it's onward and wear your helmet. Then what? Resting liquidity. Let's put a little box around this thing. Now, I want to get moving here, actually, but I want to show you. Now, there's no way to know. There's an 87% probability for yesterday's higher low, clueless. But let's look at change. Let's see if we can figure this out. And again, you don't know, at least if you do, let me know. You won't know until hindsight that a level has failed. So we don't know. So here's what happens over here. Let's look at this. So I come through the range. I'm outside of value. That suggests we're going higher right here. So let's just mark some of this up. And what I'm doing is I'm tracking the perception of value, because that's where volume is. When you go to the store, if the price is too high, you don't pay for it. If it's at a high volume level, high volume is where buyers and sellers do business. That's retail in the store. So this is the retail price in the store. Here's what I know. 87% probability. Going to the moon, having a great time. Getting longs in. Who knew? And this is resistance. That's what I know. So I have my resistance. Pull back. VPOC migration. Two possibilities. Up. I know. Every time I say this, I go, really? Yeah. Or down. And I don't know. So right here is very important, this behavior, because if we can accept this, then we can come back and check what was too high and then, go there. If I can't get over here and stay above here, then things can get ugly. Let's see what it does. See? This is auction market theory. Now, whoa. Look at that. So, and I don't know if this was fundamental. In other words, if there was any kind of Truth Social post or anything, I don't look at that kind of stuff. I can't react to news because of the news reading algos and all this. If there was anything posted anywhere, they already react to the words. So I don't worry too much about it. What I do is just follow a plan. So what do I know? Right now, going to the moon. Right here, look. This is now support. This is resistance. Resistance. Break low. So right here, this is it. Once I break below here, I now have resistance and I have my next support over here. But what else do I know? The market's long. Let's see what it does. Yeah, this is trouble. Was there anything posted, guys? Any news input that created this, other than it's just technical? Trader Lab. How are we doing in YouTube? Are you guys conscious? I always got to check on YouTube. Okay. So this was support, wasn't it? Let's go take a look at something here. Again, I'm getting into more advanced processes, and those of you who follow the stream, there is no plug and play. It's not mechanical. You've got to go beyond mechanical. It doesn't work. What works is questioning why. And the why comes from something I created in trading systems. Kiloton, account is locked. What does that mean? You hit a loss limit and you're keeping yourself from abusing yourself. Okay, so what is changed? So when I built systems, they were conditional. In other words, if this, then that. So if a condition was true, then it would go down a track of logic, down to specific trades that were qualified under the condition. It's not complicated. If this and that, if not, then what? Well, if it's not, then certain trades aren't qualified. So if this is too low, then that, then wherever, right? If this is too high and this now becomes too low, this is resistance, this is support, and whatever. Now, I break down. I'm now coming outside of the range, and I know my buyers were here. Notice they come back in again. You see this? This is an order flow structure. That's why it is here. The variable high volume node, which was too low, look at all the pieces, is here. So if this, then that, up. But if I break down, then what? Then hasta la vista, longs, see you later. This is a short in the Trader Lab. Key. This is the retail price from Friday. It was too low. Once I get back below it, where the buyers were, I can sell this, and then I'm going to wipe out the longs. And for me, I'm just as clueless as everybody else. But I will tell you, I'm not ignorant. But I am clueless is a term I use for myself. Okay. There was news around that time. Thanks. Um, Truth Social. EU freezes U.S. trade deal approval over Trump tariff uncertainty. Trump reiterates, I do not have to go back to Congress to get approval of tariffs. Great. Well, that kind of gives you the idea. So if you have a trade plan, if you didn't even know about that input, which you wouldn't until after the fact, this would have you short if it's in your plan. Again, now let's go back the other way here. What else do I know? Let's come back. Where were my longs? Where was my order flow trigger? There was one here. The order flow trigger was there. Another short. A VHVN. I think I posted this one in the lab. This is a short. There's a short. Anyway, they're all shorts. What can I tell you? Order flow, where'd that come from? And you have high volume. Now let me take you into this. The volume point of control, highest volume is here, right? This is what this thing looks like. Now these are multiple distributions, but let me keep it simple. You notice how we fell out of all this. That is saying, let's go back to the store, too high. So I'm just reading the chats, guys. How are you guys doing? You all right? So this sets up a short continuation trade if it's in your plan. We also have this. So all these, and what I was starting to say, sorry, I get distracted. This is too high, too low, support, too high, too low. If I fall out of this, then I'm auctioning. I'm going too high, too low. You got to be kidding. I'm leaving. Too high, too low. You're nuts. And I'm moving down. What I'm doing here, or the market is doing, is it's going, that's too expensive. We're not going to pay that. Are you sure? No, we're not paying that. No, short. Short. Resistance. Notice the liquidity. I can trade against the liquidity because now I have a backstop. Now you have to understand with liquidity, it's like standing on a banana peel, because this could come in the book and we see it and we lean on it, and then if it pulls or it flips, it could be, we could get trapped. It's just part of the random nature of the market. So this is not about predicting being right. It's alignment, putting your risk on, and taking your stop. That's the way it is. You have to get over it. You are going to take stops. It's just overhead and cost of production. A mature trader, and this takes time, maturity has to do with experience to recognize emotional states. A mature trader understands they're going to take stops and that they're mentally or psychologically attached to the outcome of every trade. It's life or death. By the way, life or death. Listen very carefully. Life or death. What is life or death in trading? It's Hyde. It's the lunatic under the hood. The emotions, the primal wiring perceives when you're in an environment of randomness, which this is 100% of the time, then you're at risk. And it perceives risk as danger to your life. So it triggers behavior. Get out. Don't stay at risk. Oh, you're going to give it back. Let's bail out here. All of that. Or I'm not sure. Oh, it's definitely going down from here. Or it's going down wherever. Here. and you get stopped, whatever it is. The behavior it takes to succeed in trading is absolutely 180 degrees opposite of what the behavior is to live on the planet here. So in this environment, you need to learn about the chemical triggers, your response to hormones that are released in your brain, the cortisol, fight and flight mechanisms, all that. You need to understand it. And most of us are too busy trying to find the next setup without understanding why we can't succeed as traders. The biggest obstacle, in my opinion, and at least it is for every trader I've worked with, and I've trained quite a reasonable number of traders over many years, 47 years, you try to help other traders who don't understand, and then eventually you do it proficiently. And that's why I decided to do the Trader Lab, because I understand how to train traders, and I understand how to break complex concepts down into things you can relate to from the world you already understand, which is planet Earth. You're not on Earth anymore, in spite of it all. You're in a different place, so you have to adapt to a different environment. Remember, pulled. There were some buyers here. Sweep, this suggests counter rotation. If this, then that. If not, break low, then what? Then that, then a short. What about this? Break low, come across. If not, then what? Then south. Get outside of value, then what? Hasta la vista, thanks for playing. They get a coupon to the buffet. VPOC migration. Watch. Where am I trying to go? Well, yesterday's low. I missed yesterday's high. You remember that, right? What was that? 87% probability. And you have to vet that for yourself. Past performance, not indicative of future results. If I have an 87% probability of taking out the higher low, here's the question for this astute group of traders. Might you think if we just missed the high and we trapped the buyers from this morning? Remember how the market works? Market will trap, and then we have the longs from Friday. Who do you think is selling? Well, if you're in Trader Lab, you're selling, but the longs. So I already know that I have sellers built in, and in all time frames, it works the same way. So I know I have longs in here, and then this morning when we opened down in here somewhere, I think it was in this area, we got new longs. Failed to take out this high. Well, I got that 87% probability. This is the way I look at it. I'm going, we'll see you later, and I've got 28-ish as a potential area to observe as a target, assuming that's accurate, and it might be off a little bit, but probably not too much. Does that make sense, guys? So the rotations you're seeing in the RTH time frame, as you think of it, and it is a time frame because it's fixed, open, high, low, close. That is the daily time frame. Now, I don't use anything. And it's not important. What's important is you can do whatever works for you. It's not right, wrong. I found that the market is really volume-based, not time-based. But RTH is important. But when it comes to weekly, monthly, and the rest of that, I don't use those, quote, time frames. I'm just going to use the volume. And however that works out, where the excesses were high, low, in different time frames, that's what I use, and I only use the volume. So I'm not using, the week or whatever, I just don't do that. And that's just based on my experience. I'm not saying it's right. Everybody does their own thing. You have to find what speaks to you. This is what speaks to me. And also this speaks to me right here. Here's a way to look at this. This is, again, what have we done? This is the outside edge. We are rejecting all of this volume. If I get below this low volume node, which is right here, and what is a low volume node? Well, if I fall out, and this is my outside edge, I'm looking, but the trend is down. So if I break down, now I can look to lean against, I'm not paying that, and sell it. Where is that, Tom? Good question. Well, the low volume node is here. I'm just going to throw a little label in here so you can see this. So I'm using the profile because it shows me where the edges are. Now I can see it other ways, but it's much clearer looking at this than, you know, it's just clear. It stands out, you see. So I can see this volume here. So when let me show it to you before it gets there so you can kind of see what it looks like. See, there's nothing going on here. This is the outside edge. I don't know. As I go forward, I break low. There's a sweep and there's liquidity. There's my icebergs. There's my buyers. So now this is important. So I'm just going to put a little box like you've seen me do. I'm just doing a process. This is a little out of whack. This. Yeah, let me try this again. Let's look. See the behavior here? Outside edges here. So if I'm getting involved in here, I'm going to not put my stop here because there's going to be buy stops here. If I retrace and I sell it, I have to have my stop away from this. Here's why. There's going to be buy stops right here. So if I take the retracement against this microstructure, I'm aware that these guys can get picked and then we can continue. And I don't know. Or I take a stop, whatever it does, it does. Watch. Where'd we come? Let's look. I think you can kind of get the idea, right? See where the short is? So there's a short here, advanced trader methodology, and you have to not have your stop here. So you could sell that. You could sell this. You could sell this. Guys, structured trades, right? Can you see something? Can you see that I'm doing a process and I'm combining order flow and the auction and the volume profile, statistical probabilities. Oh, and by the way, 9:30 Central Time, my time, there's over a 90% probability, and this is time-based, that I take out either, it's about a 98% probability I take out first hour's high or low. I'm going to walk on the wild side here and say, selling the IB. Now we have a structured trade here called the IB continuation trade. So let's get going. Let's see. And remember, everybody takes stops. This is part of the thrill. So short there, 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 there. This, no comment. Watch. Yesterday's low. And why are there buyers here, by the way? You would ask yourself, why would anybody buy yesterday's low in a liquidating market? Aren't you asking yourself that right now? Here's what I suspect. There's tons of sell stops from all the longs from Friday who are now under the bus, right? And they become market orders, right? These are passive buy orders, limit orders. They need the market orders, the liquidity, and there's a huge number of buyers sitting here. That's the icebergs. And remember, with icebergs, you only see the tip. You'll never see the full number, right? And there's a sweep. So I have a sweep, target, and once we're out of here, hasta la vista. And where's my next target, by the way? Let's come back. And these are not recommendations. And by the way, targets, there's nothing predictive. This is a high volume area, assuming it's accurate. And it could, again, it might be off because of data issues that are affecting investor RT. This is a high volume area, right here. This is like your retail price in an intermediate time frame. So, or a higher time frame, I should say. This is the highest time frame. This takes all the volume that's ever been done since we've been up here, which goes back to here, all of it. So everything that's in here is represented over here. So this is very significant. So I know that this is important. I also know this out here, this 91, this area, which is where the buyers are, this is really the line in the sand. If we get under this, then I am going to my fallout shelter. But in the meantime, the market is rotational. You see how the market works? How it equally abuses everybody? And the market rotates. If you're a day trader, you are trading inside of these days. So while we can be going down today, we're going to be rotating in here. And then we can be taking trades inside. Now, if we think the market's directional, which maybe it is, then maybe the smart thing to do, subject to your plan and your edge, and you have to do work to know that you actually have an edge, is only to take continuation shorts. Anybody who gets long on a day like today, well, let me put it this way. I think we can agree maybe that's a counter trend trade. Now, I always suggest for any trader, or at least developing traders, you don't trade counter trend in a liquidating market. You wait for counter rotations to get in alignment, because the extensions, if you notice, the range is on the short side. It's certainly not on the long side, other than some squeezes, which you will get. If the market gets too short or too lopsided, you will get counter rotations. What's resistance? Let's look at this. Oh, let's not look at this. Let's go back to 9:30. Sorry, IB. So 9:30 Central Time, the first hour's low, 98% probability. I can tell you, for me, if I'm on the short side, I am trading into this statistic and I'm trading into that statistic. That's what I need to know. So I'm going to keep taking shorts at my locations. Here is an important location. Let's watch this location. I break below it, it becomes resistance. I come to support, no clue. Watch. So 9:30, which is here, sets up the first hour's low. It's right there, the IB low, IBL. Okay, so what I'm looking for at 9:30 is for it to come below, which it does here, and then to come back. And if it comes back, I'm going to look to sell it for continuation to my 87% probability. And this, not a recommendation, it's just the auction. You know, who knows, right? Do you know? I don't know. So what do I know? Here's what I can only tell you what I know. I cannot tell you what it'll do. That, my friends, is not part of this. Knowing is not part of trading. The best you have is maybe. Maybe it'll do this, maybe it'll do that, maybe it'll come over here, maybe it'll go there, maybe it won't do anything. That makes sense. By the way, if you have questions, please post them. I'll do my best. So let's look. At 9:30 is the IB. This is the retail price. This is range extension. I pull back to the IB. Now right here, let me show it to you. There's a couple of trades in here. I'm going to show you actually the most important one. And this is a structured trade. If you vetted it, don't forget. Let's look at the behavior here. Don't forget, my buyers were waiting at yesterday's low, wherever that went. I'm sorry, not there yet. This. As long as we're at it and look at this liquidity, I'm going to just throw this over here, maybe. Wow, come on. Gets a little annoying with the, I'm trying to draw this stuff, and it's just sometimes I pulled it too far. It's my fault. Anyway, that's a short, right? We already talked about that. So now let's look at the IB continuation trade. There's a couple ways you can do this. Now, I know I have resistance here. This is resistance, and this is resistance up here. Let me show you. So I mark these. Otherwise, I forget them. This is my retail price, variable high volume node. It moves down. Current retail price, language says too high. That's why this is a short, okay? And it's at 921. I would take this, again, just me, I'm not saying it's a recommendation, because I have a 98% probability at 930 or after to take out either first hour's high or low. I'm leaning here. What about you? If I'm approaching 930, which is here, what am I going to do? I'm going to keep selling, if assuming that's the context. Selling. Now, the IB is here, and here's 930. I break it here, so I have what's called range extension. I rotate up. My resistance is here. I have a trade here now. I can sell this. Stop has to be there. I break low. I'm under here. I break above. This becomes support. I'm back at the IB. Right here is a trigger. It's microstructured. Let me show you. I'm going to go down in time frame as you think about it. Just watch. Everything you see me do is the same, except it's you guys think of it as time frames. Let me show you in a micro now. I'm going to take you shorter time frame. Let's go. Let's go look at this. Wait a minute. This, I'm isolating this. I'm taking the IB continuation trade. All we're going to look at is this isolated behavior in micro. Because remember how the market works. It's called mean reversion. Reversion is, I believe, and you have to vet this for yourself, if there ever was the secret sauce, it's no secret, except most traders don't understand market mechanics, so they just don't get it. It's called mean reversion. The mean is the store. The mean is the retail price. The retail price is the high volume in all time frames. So if I get my IB trigger, which is down here at 930, now I'm looking for a short, and it has to return. Now it comes back. What do I know? I know I fell out of a distribution. I know this might, I'm always going to say maybe, because I don't know, be too high. I know this is my new distribution that I'm forming. And in this distribution, you will see that there's liquidity maybe and high volume. So this is your, I'm not paying that. Yeah, but it's on sale. Retail. Watch. No clue. Break low. Okay, what is this, Tom? Notice the volume. That's a trigger. Now I have a trigger. This is the IB continuation trade. You can screenshot this if you're inclined. Where's my support? It's there. So I got support here. I got resistance here. Since the trend is down, and I got yesterday's low open, right? 87% probability. What am I doing? Selling. How do I get in? Trigger, you can screenshot this. Test of the high volume. This is the same as testing that. Different time frame. This is developing daily time frame. This is the micro. Trigger. Test. Too high. Leave it. Where am I going? Well, we'll see. Where am I trying to go? There. 87% probability. What do you think? Test. So you have an entry. Let's look. There. Structured trade. Stop above here, minimum. Better if it's a little outside. Up to you. You have to vet it. Support. Sweep. Upside rotation. Right here. Support. Watch. What time is it? 9:46. I'm not getting anywhere here. There's so many trades today. Guys, There's so many trades today. Break low. This will get away from you. It's resistance though. Let's extend it out. Now we're going for this, remember? Let's watch. Break low. This is now resistance. Resistance, resistance. For me, nothing to do here. In other words, trade management, just shorts. So let's look at this. This, now, when this starts coming up, like notice the behavior here, that's resistance. If you took this, and my target is over here, I'm not saying it's any good, it just is what it is. This could be a short. You have to be aware the market is short, which means it can counter rotate, but that's every moment. This is a short. You would get risk neutral. About 5 or 6 points, or you take a stop here. One or the other. It is what it is. Now we come into liquidity over here. Outside edge. Let's see what happens up here. This is support. That's resistance. If you don't have a trade here, there's nothing to do, nothing to think about. Don't even think about it. Notice the liquidity comes back in here and we have VPOC migration. What does it say? I'm not paying that. Where are we? Outside of the IB. Where does that suggest? We'll see you later. I'll send you a postcard. Now, okay, we're in real time. Great. How you guys doing? You have questions? I've only got a couple of minutes left, maybe 15. What do we know? Let me get back here. RTH low, currently. Sweeps. Retracement back to liquidity. Liquidity is in here. What comes down here? Liquidity jumps in. No clue. Watch. No clue. The way I tend to work with this is if I break below this, my trailing stop would go above this liquidity. And the reason is my buyers are here and I got under them. And there's my sellers. So the sellers are still in control here. I get to this. My buyers are here, more buyers. I bounce, and as long as I'm under here, I'm going south. I come down. What happens over here? Notice. See the change in behavior. Let's just stay together on this. And again, no clue. Remember, clueless, not ignorant, just random environment. Now, this is too low and this was too high. If I'm above here, finito. Or I have another trade management process that you have vetted. When I say I mean you. So I'm outside of yesterday's range. I'm outside of value. I personally have no longs. It's not a recommendation. I just trade with the dominant side. So that's just me. Keep it simple. So mentally, all I have to do is manage my trades. If I get taken out, that's fine. Did I follow my plan? Yes, no. If I follow my plan, no matter the outcome, that's how I'm going to create sustainability and profitability. Because the plan, if it has an edge, your job when you come to trading is not to make it up. Everything, every piece of this, you already know what you're going to do. You have to know what you're going to do. You don't know what the market's going to do or the other participants. So you got to anchor your inputs. And that's in my primer webinar that I did. It's got about 36,000 views. It talks about the business. And really, what is this business? This is gaming. It's nothing more than that. And gaming is something that you definitely want to understand, because in casinos, they only play games the same way. They don't change them. They don't make them up. They don't change the rules. And if they pay a gambler on the last hand, they're not going to skip the next hand. What do? We all do human things, not business oriented trading things. We got to know where we are and then behave accordingly. Notice yesterday's low. Did we get into the range? No. Where's support? It's down here. What can I do? If I come outside, here's what I know. If I come outside, I have an outside edge here, right there, and I have high volume here and another outside edge here. So it could just come outside, and I don't know. It comes up on stops, and this could be the low of the day, right? Yes? No? Maybe? Does it have to go here? Never. Doesn't have to do anything. So for me, my job is just continuation shorts until that's it. Okay? And that's just plan oriented. It is nothing more than that. So when I show up to trade, I show up with my plan. When the condition of the market changes, I have a plan that accommodates change, and then I go from longs, I go to shorts. If the market is in two-sided trade, which it isn't today, then I can trade from either side, but I found that for me, I'd like to take less trades, more range. And one of the things that here's a question for all of you. Is it about winning trades, or is it about range? What do they say? Cut your losses short, let your profits run. What does that really translate to? It translates into not trading short rotations, because if you look at risk and reward, they're not really skewed favorably for you, because we're all going to take stops. So every time you put a trade on, of course, you're taking risk, naturally. Well, if you go to shorter rotations, you're taking more trades, which means you're taking more risk. Does taking more risk translate into more profit, or does it translate into shorter rotations, less opportunity, equal risk, more stops? So if I'm taking the same risk for a 20-point trade as a 6-point rotation, how does that work out? They don't. So you need to understand a time frame that you can operate in. I find, for me, and a lot of traders I know, and this doesn't mean it has to be you, most of us start out with, we want action and dopamine, and we have a fantasy that this is just an ATM. Well, this takes skill. And it also takes an understanding of where the best opportunities come from. That's where vetting comes from, knowing your trades. Not what will happen, but what might happen. And then anticipating it, not predicting it. So I already know where my trades might show up. I don't know if they will. I don't know if I'll take a stop. What is so unusual about that? Do you? I don't know which trade is going to work. I'm clueless. Capital, you're asking me how can you analyze the strength of each side of the range on the NQ? Well, one way is just look at the rotation and see which side is dominant. So that's one way. If the shorts are in control, even though you're going to get counter rotations, the down rotations are going to be the ones that have the larger range. So that's one way. I think that's the easiest way to do it. So what the market can do, it is, so let's look at what the condition of the market is. It's down. Okay, that's obvious. So the trend is down currently. Intraday, it can go rotational inside of the downtrend. This is where this multiple time frame thing comes from. A vertical integration of time and behavior. So when I showed you the context grid sheet, and this is kind of where a lot of us, me too, early on, everything you guys have done, I did, and try not to repeat. But the auction takes place in all time frames. The rotations are time frame based. So let's say the daily trend is down. So the context in the higher time frame is down. Maybe we're in a bull market still, so that's up, But for the day, the context so far is down. So we're in a higher time frame up, maybe, unless it changes. Who knows? In the daily time frame, developing time frame, we started up in the morning and now it's down. So higher time frame up, developing daily time frame down, and then inside of it, the context in different time frames can be rotational, so up and down. So then that's all time frame. So you have to analyze in your trading time frame, is the trend up or down? Well, for me, it's only down. So in the shorter time frames, when I get counter rotations, in other words, a context in a shorter time frame, I'm going to look to integrate the shorter time frame inside of the dominant side, which for me at the moment is the sellers. So down. Now, the best way I've been able to describe that is Matryoshka dolls, a vertical integration of time frame. You know, like they're inside each other. So if I think the trend is down, I'm outside of yesterday's range, and I can still come out here, doesn't matter. I'm then going to be trading this outside back to here, retail. Oh, it's on sale. But if I break away and now I'm doing this, then maybe this is too high out here. Now, if I get through, I can go here, I can go there. Doesn't matter to me because I can't tell you what it's going to do. I can tell you is what it's doing, where it might go, and then act accordingly. This is support. You see? So if I know this is too low and my buyers are here, then I also know the shorts in this leg have buy stops and they can become buyers. I'm always going to be trying to align. I am not going to take any longs today, and if this is the low of eternity and I don't have a long, it doesn't matter to me. I'm not attached. I'm following a plan. My plan, my outcome. I'm the only one responsible. And no matter the outcome of any trade or any day, I grade myself, and professional traders grade themselves on following their plan. The statistics take care of themselves, the probabilities. It's a random environment and a random distribution of outcomes. You see? Yeah, Greeny, we have to work on that system of yours. I have some ideas for you if you want to talk about it. Greeny is in the Trader Lab, by the way. Greeny does a lot of great work. He's working on developing algorithmic trading. There's a lot of work done in Trader Lab, so understand Trader Lab's a community of like-minded traders. Sweep, location, important behavior right here. Stops are sitting here, so you want to see the behavior. If we come through here, we have this. So that doesn't mean I'm mechanical. It means I'm observing where the outside edges are. So I have an outside edge up here. Let's mark it. I'm going to show you guys what the Trader Lab looks like. And a low volume node, this. So this is an outside edge. So if I can get up here, I can look to sell it. If it picks up in here, I always look at swings because I know there's buy stops. Not mechanically, but I know that if I come up into a swing and I take the stops and it's buy stops and not new initiators, I can, if it's vetted, fade it to come back there. That's called mean reversion. Something for you guys to think about, by the way. Here, let me try to get this chat back. This is what the Trader Lab looks like. It's a community of like-minded traders. There's a lot going on in here. You can see a lot of posts, a lot of interaction, mutual support, research, data mining, tons more. Thanks everybody at Trader Lab who participates. This is what makes the Trader Lab special. There's no cost for Trader Lab, guys. It's open to all of you. Doesn't matter how long you've been trading or what you're up to. We're all the same. Nice. By the way, we have a trader in Trader Lab. He sometimes trades while he's driving. That part I'm a little disturbed about, but I asked him today if he was going to trade while he was shoveling. He never answered that one. So That's Trader Lab. Now, there's more. There's a library of webinars and document section. You guys should watch this one. It's about an hour. It's the primer webinar. It talks about anchored inputs. In other words, you can't develop an edge with random inputs. Casinos don't play games, changing the games as they go and making it up as they go. Otherwise, they're sitting with the gamblers. How does that work out? Not so good. By the way, is there a holy grail in trading? No, there isn't. But how close can you come? You might want to watch that. Day trading, fantasy versus reality. What is it really? Really? Trading multiple time frames. How do you get aligned? Day trading. Why most traders using indicators fail. What about high volatility reports? We certainly got some volatility going on here. Trading gaps and trends. How do you do it? Well, and Ned, thanks for curating this for us. And there's a document section also. Structured trades that I've shared, stats for illustration purposes only. Those are the ones I talk about. You have to vet them. Opening, context, and alignment. That's a grid sheet I created. Mean reversion, structured trades, examples of all this. This is all available. There's no cost for it. If you're in YouTube and you haven't taken advantage of this, you can use the link down there. And visit Trader Lab. There's no cost. All you have to do is confirm your Discord username so we know you're not a spamulator. Keeps the riffraff out, if you know what I'm saying. Are you guys with me so far? How we doing? So that's available to all of you. Again, if you're in YouTube and you haven't done that, why not? Please give a like if you're visiting in YouTube also. Now we're getting sweeps. I've got about 2 minutes left. Final questions, post them right now. I'll do my best. If you're in Trader Lab, thanks so much as usual. And if you're in YouTube, don't forget to give a like. Hope you like this. This is about the business of trading. It's not about prediction. It's not about being right. You got to take all those needs that you have and you got to leave them by the curb. They have nothing to do with what happens here. Your need to be right is strictly psychological and emotional. It has nothing to do with the business. If the casinos needed to be right, they wouldn't deal anything because they'd be afraid. Well, that if you're not taking your trades, why? Fear. And maybe not having an edge. This is not a video game. If you approach it and make it up and don't know exactly what you're going to do based on what you see right here, and you already know, so you can anticipate it, not what will happen, what you will do, then you're sitting playing a video game. I can assure you of that. So, by the way, here's the catch-22. We all have winning trades. Gamblers have winning hands. Do they have an edge? No. What happens over time? The gamblers pay the house. Not on any specific hand, over a random distribution of outcomes. That's the business you want to be in. If you want to be in that business, you have to change what you believe it is, adapt to the environment, and learn how to operate in it. And the psychological aspects of this will be your greatest obstacle. I believe anybody who comes to Trader Lab can learn how to trade if they put in the work and have, the ability for it, and it's not complicated. If you're already a shopper, you have the basis of trading. You really do. What's too high, what's too low, what's fair. That's the business of trading, trying to figure out the market and the participants, what is fair and what's not. And it does it in all different time frames, interacting in like a Matryoshka doll, a vertical integration. Once you understand that, it's not your job to predict. Your job is to know where you have a statistical edge and to align and to accept the random distribution of outcomes. Remember, everybody has winning trades. If you don't have an edge, you will most likely, unless you're the exception to 95%-ish of other retail traders, you'll go out of business. So if that's the results you're having, that's called Trader Groundhog Day. Work hard, wake up in the same place. Random winners, but no statistical edge. If that's you, that's all of us. The thing is, at some point, you have to put a stake in the ground and say, I need to change what doesn't work. If that's you, come to Trader Lab. It's available to you and there's no cost. Don't forget to leave a like in YouTube. Thanks so much for visiting, and I look forward to seeing you guys soon.